Hey guys, Rhett here. Want to talk to you a little bit about a question that I get asked often, and I want to explain it a little bit more in detail, and that is, Rhett, what kind of property do you invest in and why? Okay, guys, when it comes to property that I invest in two kinds of property long term, okay? Now, I buy flip properties, I buy multiple flip properties every single month, and the prices on those and the resale values on those range. They are a range of anywhere between 300,000 and 1.5 million ARV, or after repair value. Okay, and sometimes we'll do a flip for more than that, but that's the sweet spot where there's the most attention. Okay, between 300 1.5 million, depending on what market we're in. But I'm getting off track. When it comes to long-term investing, I only buy two kinds of rental property, and that is property in low income areas and property in very, very high income areas. So I am on two completely polar opposite ends of the spectrum. Okay? I will tell you why. And the things happening in this world right now are a perfect indicator of why I do that. All right? Now, when it comes to investing in properties in the lower income areas and the higher income areas, you find that those two sides of the spectrum are the least affected in times of economic uncertainty. Okay? What do I mean by that? Well, look out your window, go to the store, live your life in today's day. Inflation nearing 10%. Things in this country are going to get a lot worse before they get better. Okay? Things going on around the world are taking a dramatic effect on us. Stock market plunging. For those of you who took a bath in cryptocurrency, it's plunging. If you haven't heard anything about Bitcoin or anything like that, everything's going down. Okay? Those who live in very poor areas, who are in the lowest section of socioeconomic groups in our country, and those who make the most money in our country, that are high net worth individuals, are not affected to the lengths as everybody else in the middle. Okay? What do I mean by that? Well, those who are living on government subsidies, those who are living in Section 8 homes, not as affected. They're not paying their own rent. They're on certain programs to help them purchase food. They're given certain stipends, welfare programs to help them live their life, regardless of what's going on out there. Now, are things going to be harder for them? 100% they are. But the U.S. government will continue to take care of those people and make sure that they have what they need. On the other side of the spectrum, you have people that are of high net worth. You have people that are in very luxury housing, making in the top 1-2% salaries in the United States. Will the price of milk going up from $2.50 a gallon to $6 a gallon, or $2.50 a gallon to $5 a gallon, or the price of gas going from, $2 a gallon or $1.79 a gallon like it was a couple years ago to $5.50 a gallon, $6 a gallon, is that going to affect them as much? No, it isn't. So when you talk about investing in the poles, right, north and south, or south and north, however you want to put it, opposite ends of the spectrum, those groups are the least affected by whatever is going on in our economy. You have one group because they're subsidized by the government. You have another group because they make so much money that they're not as directly impacted by the increasing cost of goods and the increasing cost of living. So if I'm an investor and I want to make sure that whatever I put money into, whether it's a long-term property, whatever kind of real estate I want to get into, those are the two groups that I want to rent to, because those are the two tenants that are going to be able to pay me every single month over the long term, regardless of what's going on in the world, okay? The middle class are the ones that are the hardest hit in times of drastic change and economic depressions, everything like that. The middle class is the one that gets destroyed, okay? Now, I want you guys to think about this from an investor standpoint. I don't care how much money you actually make. Where do you want to put your money? If we buy a luxury rental property in Florida on the beach and we put somebody in there making $2 million a year, we'll probably be okay. They're probably going to make their rent payments over the next couple of years, right? If we buy something in an impoverished area, but a good area, a good neighborhood, but one of low median income, if we buy it there and it's subsidized by the U.S. government, we are mitigating our risk in a phenomenal way. And that is really, guys, what this is all about. It's all about mitigating risk. And I do that by investing in high net worth areas and high luxury long-term rentals and Section 8 rentals because I want to protect my investment. You look at people that can't pay their rents when things go bad. You look at people who become upside down on mortgages and all that not good stuff. The majority of that happens, and the majority of greatest impact is always going to be in that middle class, okay? So when it comes to investing, guys, let's get into those both of those sides of the spectrum. If you can't afford to get into the high luxury stuff, here's an example. Get into the low income stuff. Protect your money, protect your money, protect your money. We're making investments. Protect your money. Guarantee yourself a return. If you can't afford to get into the high luxury stuff and the low income stuff, do both. The only thing better than getting into one of these is getting into both, because then you're hedging against everything. You have properties in low income and high income, and both of those over time are the least affected by anything going on out of our control. Okay, guys? Hope you learned something today. Whether you agree with me, disagree with me, leave your comments and questions below. I'll get to all of them. We'll see you next time.